Hi, everyone watching. This is WeOwn. We're going to talk about digital partnerships and the old and the new world. My name is Sascha Raksha. I'm the CEO of WeOwn. We have Florian Buttliner. He's the COO of WeOwn. And we have Chris Park, who is WeOwn Managing Director for the UK, and is also helping us with the partnership model. And he'll be talking about a number of these kind of partnership deals and opportunities. So what do we do as WeOwn? Just to summarize quickly, we're a technology company, and we're an alternative digital marketplace for new financing models, new financing opportunities. Our technology solution offers lending, equity, shareholder, investor services management solutions. It's built entirely on blockchain technology. We have an entire marketplace for issuers, businesses, private businesses, and investors. And we also sell or provide that solution to financial services companies, challenger neobanks, private banks, asset wealth managers, so anyone in need of digital and solutions and the marketplace. What's so smart about our technology? Because it's blockchain based, it's immutable, it's tamper-proof, it's live, it's a ledgering system that cannot be altered, and it has a lot of smarts around the settlement, counterparty risk between two parties. So some of you may heard of tokenization technology. So basically creating a digital footprint of a physical asset. That's what we do. That's the underlying technology. On top of that, we have a platform and services for issuers and businesses and investors to do the matchmaking, to facilitate loans, to facilitate equity fundraisers, and help with shareholder management services such as corporate actions, voting, shareholder investor communications. This isn't really just to talk about our technology. This session is about proactive partnerships and the digital world. And I'll ask, I'm facilitating this session and this hour, and I'm going to ask Chris to explain a little bit what sort of partnerships are we engaging with, and what sort of benefits do these partners get from utilizing digital platforms, digital technologies such as ours? Can you elaborate a little bit, Chris?
Yeah, certainly. Listen, thanks for the introduction, Sascha. So basically, as Sascha's explained, we have the platform and there's clearly a lot of interest, but our core focus is helping SMEs. Now, rather than trying to do that by ourselves, we're sort of following a movement that we've seen in creating communities. And what those communities do is they provide best-in-class services in the financial industry to the consumers, to the customers, to the SMEs. And they do that by accepting that they're very good at what they do, and then also work alongside with people that are also very good at what they do, and they complement each other. So the sort of partners that we're working with are, as Sascha said, the challenger banks, who are looking both to use the software as a service, but also are very excited about the opportunity to plug into a marketplace where they get to meet new SMEs looking to engage and looking to build relationships and looking to fund themselves going forward, but also complementary service providers. And some examples of those are foreign exchange and payment boutiques. Now, they've been around for a number of years, and a lot of them are quite traditional in their layout. But we are seeing more and more an interest in working with evolving fintech companies to enhance the proposition that they give to their customers. So they recognize that they're good at what they do, and they're looking for people who are good, that do something slightly different to them, but that still address the same customer base. We're also getting a huge amount of interest and have partnership arrangements with some professional networks. So what do I mean by professional networks? Well, they could be legal or accounting groups. They could be finance director groups. And the reason that they want to get engaged is, again, they recognize that they're trying to help the SMEs, they're trying to help their customers, and they're trying to help improve the access to financing, to growth opportunities, and to financial services to the SMEs who want to get on with growing their businesses. And by working with the likes of WeOwn, it gives them the ability to bring best in class to all these sort of different SMEs and create the bigger network. So those are sort of some of the core partners we're working with alongside the investors. And again, they are also partners, because by plugging into the back end, by plugging into the marketplace, they, alongside challenger banks, are providing capital and liquidity to help the SMEs grow. And they're doing it in such a way, and they're doing it through a platform that makes it fast and efficient. And why is that important to them? Because actually the SME marketplace for many investors has been historically off limits. Why? Because the deal sizes are small, and the process to go through to invest is often quite laborious, long-winded, and expensive. So the frictional cost of engaging with SMEs for many institutional investors has been very difficult, apart from in prepackaged products. So again, partnering up with investors through an expedient channel and route to market, and providing access to a big SME pool of companies, means the investors can quickly and efficiently drive things forward, make multiple investments, and build up their own portfolios. So those are a few of the sort of partners that we're working with, particularly in the UK at the moment and across Europe.
So Chris, I mean, you've got a lot of experience in terms of traditional banking, right? And I mean, what are the ingrained challenges banks have with kind of their loan books and maybe the COVID situation at the moment? And what sort of opportunities do they see with, you know, post-COVID type opportunities and the way these kind of new fintech platforms operate? I mean, what do you see with your experience?
Yeah, by experience you mean many years, and I'm old.
Many years.
Many years. Yeah. I mean, if we're looking to both if we look to the big banks, you can see they are trying to drive through, and it's been talked about a lot in today's sessions. They're trying to drive through big innovation drives, and they're trying to make new platforms available and digitize. So you can see the direction of travel. However, as we sort of mentioned, the best in class and working with people that suit your needs for SMEs, and the fact that there has been a retrenchment from the high street often means that challenger banks are sort of coming in to fill. Now, COVID obviously has had a massive impact in the industry, or in all industries. And I think the opportunity that we see going forward is by building the relationships with the investors and the SMEs, we're better able to understand their needs and requirements. And challenger banks see this as well. And instead of waiting until they can build out a large design internal program, they're looking in many cases for a sort of plug and play solution, a sort of software as a service, but also with the added benefit of the additional marketplace. So challenger banks could work with WeOwn to access the SMEs directly that are on the WeOwn platform, as well as to use a white label version as a ready functioning service to provide new products and services to their existing customer base. So it's a little bit of a win-win situation. And things are moving so quickly and so dynamically now that no bank, no financial services provider could really afford to sort of sit back and start a 2-3 year program and hope that the marketplace is still there when they get there.
Great, thanks, Chris. Florian, I mean, obviously, you know the German-speaking world we're operating in. With Chris's help, we're now moving to the UK, and we have a number of great opportunities. In terms of the business and deal flow side, Florian, what benefits do you see in terms of the technology and technology solutions can provide, for example, in the SME market, and maybe utilizing a platform like ours? What sort of things can financial services organizations, funds, asset managers utilize, and how can it help them?
I think there's many different things. One of the challenges we see quite a lot of times is, especially in the asset management space, they have to look at different companies because they might evaluate and put them into their funds. So they often get a lot of requests from businesses they need to look at. So this pre-screening in a lot of cases is something those companies would do almost like paper-based, or they would put it into an Excel sheet. It's not really a structured process and highly inefficient. So this pre-screening is something, for example, our platform can facilitate and help and simplify. And I think then the journey that usually these companies would take also can be simplified a lot. So talking about electronic onboarding, so they would upload the necessary data so that the asset management company can see that this is a valid company, that it has a proper structure and so on. So all these documents to review can be uploaded digitally. And with a lot of companies we're talking at the moment, this is the total opposite. This is really like emails going around, and lots of time spent by back and forth processes. So I think this is definitely a space where we see room for a lot of improvements when we talk to these, especially asset managers. The second area definitely pops up is when it comes to the actual investment. So in a lot of cases, the way it works is they might, those fund managers might have a website where they list all the opportunities, but if the investor really wants to invest, what they do is pick up a phone, call the fund manager, and then they would facilitate all the remaining processes, which is obviously costly. And if you look at the recent studies, you can see that the fees are dropping and they're on the decline in the market. So I think Corona has pushed a thought process of, oh, that's not going to work in a couple of years probably. So we need to move. And what we see in all the other areas with shopping and all the other areas of our lives is we need to push our investors to go to a platform, onboard, invest, do the payment electronically, get the shares or the stake or whatever they want to acquire. And if they want to be flexible, so they no one wants to be locked in. They want to go on a secondary market and trade their stakes. I think that's exactly what they realize is what the investors really expect from them.
Okay, great. Florian, show us maybe. I mean, we've got a few videos and demos, right? Show us the lending process and how, for example, we've got a pretty great rating credit scoring mechanism built in. Maybe you can just show quickly what we're talking about and show our product. And it's interesting that when you talk about fintech, you talk about banking, you talk about the legacy world, the new world. A lot of it still, even in the fintech world, a lot of it still relies on physical paper, manual procedures. And that's what we try to tackle with our products and services. We build an entire end-to-end automated solution without any sort of physical paper. Even, you hear a lot of these challenger banks, they're run in many cases in the back office still like a traditional bank with lots of physical paper. So there's a lot to be done even in the fintech world. Maybe Florian shows a quick demo of how the peer-to-peer lending works.
Yep, sure. Can you see it?
Yep. It's come up.
Okay. Oh, funny. It's just let me see. Yep. Now, okay. So this is really just a very quick sneak preview, not a preview, but it's just highlighting on how the investor can onboard. Really straightforward. And what we discussed, or what I mentioned beforehand, especially the KYC process where people need to identify themselves, upload documents. Obviously, this is built in electronically. People would upload the necessary documents, and then they would be already onboarded on the platform. What's important in the next step is that they can also define the preferences they would like to invest in, and they get notified if there is a business which matches their preferences. They can go onto the platform. They can do that without logging in even, and review the company details. They can see the rating, and with only a few clicks, this is the lending as we have seen. They can do a pledge, sign the contract all electronically, and then at the very end move into the payment. We talk always about peer-to-peer. And of course, what you would need as an investor and expect is a decent reporting so you can see in which areas and branches you invest. So What we haven't covered now in this video, but what Sasha was mentioning is part of the onboarding process, is you need to have a rating, because you as an investor, you want to have an independent source and how you can compare a company against the other. And a lot of partners are asking us, so what's the methodology? Is it something you do internally? And is there maybe a certain bias you potentially apply? Because on the one side, you operate a platform, on the other side, you want to be neutral, which somehow conflicts. The approach we're taking is to work together with independent rating providers, usually the ones that serve the best service for a specific country. We also can integrate into the existing scoring partners that our partners might have. And then what we get is a rating that is fully independent from us, and the investors really can make up their mind whether this is the company they would like to invest. And I think this is a very different approach that we have taken from the very beginning, and which makes us, I think, stand out to a lot of other companies.
Okay, great. Thanks, Florian. You can stop sharing your screen.
Oh, yeah. Sorry.
Because we're seeing us many times.
It's like looping.
Chris, in terms of the commercial model, obviously, partnering with a financial services organization, a bank, or whatever, what's in it for both sides? I mean, there has to be, you've got the old "what's in it for me." What's in it from a commercial perspective for both parties? And you have referring agreements, you have commerciality around, you share fees and all that. But what does it look like, and what are the benefits to organizations financially?
Yeah, so listen, I think where partners find it interesting and where they're very excited, yes, there are referring arrangements and sort of fee shares that can flow through. But actually, the biggest motivator is having a different conversation with their clients, helping the SMEs, driving their clients' businesses forward, providing a better service to the SMEs that they're engaged with. So you would initially think that the sort of concept of money and sort of immediate funds flow for a referrer would be the primary driver. But actually, we're finding people in many cases are keen to ignore that step and go straight forward to leveraging the network. And it's, again, as we sort of mentioned the word community earlier on, and the marketplace. And a lot of this is about the community and the marketplace. It's about getting the clients helped, getting the sort of referrals, and the platform, rather than a platform where people go at a point in time just to ask for, we would like some money today, please, or tomorrow. It's very much about the other services the platform provides that help people manage their cap tables, help them with their shareholder management, means that SMEs can register and actually start to create relationships and build profile on the platform with other partners, and the community then starts to serve those SMEs better and cross refers and builds up a level of interest. So it's an ongoing live engagement as opposed to a point specific. And I think that's very important, particularly for investors. And getting different types of investors investing in the SME marketplace is going to continue to support the economy in the countries we're operating in, because investors will have different requirements. And this is a marketplace, because it's been blocked off to them directly previously because of the sizing, has meant that they can come along, they can start to look for specific sectors, for specific credit qualities, and actually build relationships that may go on for a period of time prior to actually making an investment. So again, it's a very different approach from what we've seen elsewhere in the marketplace, with people sort of coming along saying, this is my company, I need some money, can I please have it, and then disappearing again. So it is building that community and relationship, and that benefits the partners, it benefits the professionals that sort of work with us, and it also means that challenger banks and the like can look for other opportunities to get engaged where geographically they may not currently have a presence. So I think there's a lot of excitement around the partnership and about the community, and it's really that exposure that's driving people's engagement as opposed to things like referral fees.
Okay. No, that's great. It's not just, it's about really that customer engagement. And as we heard from a lot of sessions today at the FinTech Talents Conference, it's about finding your customers, right? Finding your user groups, your consumers, and giving them something new and something to experience. And that's what we're seeing with a lot of these partners and clients of ours. And there's a great question. I want to respond to a question in the chat. Are you regulated, or are you in the process, or you don't need one? And let me answer that directly myself. We've really focused on the lighter regulation, or effectively an unregulated service, because with regulation there comes overhead complexity. I mean, regulation is there to protect the issuer, the investors, and so on. But especially for the peer-to-peer elements, we focused on providing an unregulated service that we had reviewed and approved by the regulator in the countries we're operating in. And that's really, really important because we can apply a more innovative, more challenging, and maybe a little bit more of an aggressive approach in terms of what we provide between two parties. So on the lending side, we match an investor, a semi-professional investor, accredited investor, directly with the business. We have rating and scoring companies connected to our platform, but at the end of the day, we allow the investor to make up their mind and provide a decision and to agree directly with the business. We're not doing anything in that sense. We're providing the platform, but both parties agree on a contract with each other. Now, we provide the smarts, we provide services around it and all that, but at the end of the day, it's an accredited or an institutional investor on the lending side that will make an informed decision to lend or basically borrow to a business, yeah, as an example. Yeah. Florian, one of the things we're quite proud of is not just the equity fundraising elements, so like an equity crowdfunding, a peer-to-peer lending approach, but around investor services. And Chris has mentioned, cap table management, corporate actions, the processes after you've done a life cycle event. Yeah, we call life cycle events a primary issuance, a fundraise, M&A type activities, corporate actions. Those are life cycle events for businesses. Talk us through some of the smarts that we have in terms of investor services, investor management, like the analytics stuff, voting, shareholder or investor engagement, given our background with one of the large registrars. I know, Florian, you have a few demos around that too. How do I know?
How could you know? Yeah, that's an interesting aspect. Also, when we talk to potential customers or partners, a lot of them struggle with insight into the data. That's because, as we did discuss beforehand, often data is in Excel or in other files or in different data sources. So often they struggle to really get a proper overview of data. But that's obviously a benefit if you have a platform that can combine all these data and provide it into a proper analytics dashboard. But it's not just, and we will see a few examples, it's not just about good-looking reports, which always work fine on a conference. But if you think of someone who is holding assets or stakes or shares, whatever you call it, it is so important that you also are able to report this towards your financial department. It might be an external party, it might be a compliance team, whatever. So you need to have the right tools to, at any point in time, export the data or share it with other parties. That's very common. So if we just have a brief look at some of the reports, you will see that some of them probably don't look great, but they serve the purpose of being in the right format if you need. So just one of the examples at the very beginning is the compliance report. So you might need to see how your register looked 2 days ago or a year ago. You might want to see the top transactions, or like in the old world, some of the stakeholders still might ask for a certificate. So this is how it could look like. And again, this is the export capability that you need, because obviously you don't want to potentially send it around. You just need a PDF that you want to print out. And then this is the good looking thing that you can show on our conference, is the slice and dice, where you can look into segments, where you can look into the demographics. Now, some of the data obviously only makes sense if you have a larger register, but if it's above a certain size, this is highly interesting to see. For example, if we look into voting, and that's one of the topics I will bring up in a second. Obviously, the insight into the resolutions that you need as a company, and the quorum to understand, for example, how many shareholders I would need to convince to reach a certain quorum, or compare my company against other companies in the same sector to see what are my age groups, or what type of investors are potentially interested to engage with. So I think this is now talking about the analytics part, which is obviously gives you the insight and the overview of the investors you have. The other part that is quite interesting at the moment, or raises a lot of attention that we see in a lot of discussions, is now companies have been very used to those the AGMs on a yearly basis, so they would all sit together and have a nice meeting. Now, in Corona times, obviously, this is not the best way to probably come together. So you have to think of some digital forms of doing a voting, and this is one of the corporate actions that we have implemented, and it's fully digital from start to end, which gives a company a really good opportunity to really facilitate a voting. And as a little bonus, we obviously store the results on blockchain, which means it's absolutely immutable. So
Florian, there's a lot of disputes, right, around a lot of those records. I mean, back in the traditional world, you have 10, 12, 15 relational databases. They're all synced up with each other or not. You have a clearinghouse, a settlement provider that does the clearing, so basically the cash, the assets, and all that. And with tokenization and the technology we have, blockchain, a lot of that is basically disappearing. So you have a smart contract between two parties, and basically the assets and the payment is clearing pretty much instantaneous. Yeah? Yeah. That means the disputes around corporate actions, voting, annual meetings, or just club meetings as such for private businesses, as well as I own this asset and I really own this asset, is something that we've eliminated, right?
Yeah. I mean, I've been on so many AGMs from the big players behind the scenes, not as an investor, but like the telecoms and the Adidas of the world. Yeah, it's amazing the complexity you just generate with all the intermediaries you have on board to collect the votes, and then you have the different processes of disclosing. So, I mean, I could talk for hours probably, but the simplicity is amazing if you have the parties on a platform. They're identified. All of them at least have a smartphone, so you can set up a resolution. Let me maybe show it, and just instead of just talking, you set up a resolution very quickly. Let's just need to very quickly. It's really only a few steps. This is what we offer in the platform. So it's always the first step, right? So you have to do the bit of the admin stuff to set up what you want to discuss. This is part of your articles of association. You define the start and end dates. You fill in all your resolutions. Again, now I know this is now not super exciting, but this is part of a company, any company that exists. But you define the parameters. In the next step, as you can see, with only a few clicks, you send out an invitation. Usually, probably you would not just pick a few, you would send it out to everyone. What happens is it triggers an email, everyone gets an invitation, obviously securely with a code. The code needs to be entered either on the smartphone, or you can also use the investor platform on your PC. And then the voting is super simple, where you just either say yes or no. the results obviously can be looked at by the company. And I was talking about analytics, where it's not just about looking at nice looking figures, it's also storing it, showing it to your, I don't know, corporate lawyer or your bank. And these are the features that you need. So, I mean, I know this is super fast, but you might have seen it's really from the very start to the very end of the voting. It's the entire process fully digital. And if you compare it to companies that we talk to, they're saying, oh, if we have a voting, then it all starts with us sending around an email with an attachment to all our, whatever, 25 investors. And the voting in a lot of cases is not that everyone just would respond with either yes or no. Sometimes they have this circular form of voting, so then it really goes in circles. And you can imagine this takes days and weeks. There are lots of errors, and usually there are people sitting there keying in all the results into, again, probably a spreadsheet to then distribute the results. Everything we have just seen is super transparent. It's stored in blockchain. It can be seen both by the investors and obviously by the business. So I think gives a bit of a sense on how different those digital processes could look like.
So basically, on a partnership level, we obviously have multiple phases, right? We have the engagement, the digital channel, the customer or consumer acquisition side, and this is usually where we're seeing, financial services organizations that are in need of a digital service in that space, wanting to tap into immediately. But then on the other hand, on a phase two and a wider approach, you have the whole element of the clearing, the settlement side, the transaction side in the background, obviously investor shareholder management services. And the biggest piece which technology advancement has progressed with is reducing the counterparty risk between the two parties, which is imminent, especially in the equity world, still exists with exchanges. And that is something that our technology and this kind of model around blockchain and smart contracts really eliminates. You go to T+0 from T+1, T+2, settlement times.
Maybe just as an addition, because you were talking about engagement, investor engagement, I think we can see a bit of a change in the past, especially when we were dealing with the larger companies in the past. For them, it was often a burden. They didn't really like these engagements because it was often, obviously, it was paper-based, but they didn't really understand that any investor might be a really important multiplier or could become a multiplier for your company. It could be someone who really promotes your services for free because they believe in what you're doing. And if you talk to younger type companies, they have a different understanding in a lot of cases. So they understand the value of an investor, the data and the possibility to interact. And I think this really plays into also a better understanding when we talk and engage with partner companies. They say, oh yeah, right, yes, it's not just keying in all the investor data and this is a pain. This might be a one-time opportunity, but then it's really about maintaining the relationship, utilizing the relationship, and getting something out of it. And I think this is where these type of platforms like ours can really help a lot, because obviously you have everything in one place. You have the digital tools to interact, be it voting or be it sending out communication pieces.
Okay, great.
So in essence, it's kind of enabling the SMEs to do what they want to do, which is to continue to grow. And whatever they're looking for, whether it's equity, whether it's debt, whether or not it's just transferring shares amongst, they can do it quickly and efficiently and then get back to focusing on their business, which is their real raison d'etre. And I think that's one of the key things. And that's something that the partners we speak to are very interested in. They like the fact that it's not detracting from the business process. They like the fact that it's giving people the opportunity to focus on what they want to focus on, which is running their business. And it actually makes all the bits that go around the side of being a fast-growing business, being an exciting and interesting business, trying to expand geographically, customer base. It takes all those, it keeps those at front and center, and then enables you to deal quickly and seamlessly with the, shall we say, necessary evils of going through that growth path.
Sounds good, Chris. Florian, show us the equity side. and how that works. I mean, on the equity side, you obviously have, the equity crowdfunding. You have, the ICO world back in the day, or well, 2 years ago or a year ago, and now you have the whole concept of security tokens, right? Tokenization of securities, digitization, allowing retail and institutional investors easily to participate in fundraising initiatives. And one of the things, we were one of the first companies to build an entire ecosystem and marketplace where a private business can sell shares and equity in their own business through an open platform, through an open marketplace. And obviously all of that is something that we have available for partners as a white label solution, as an integration solution. Walk us through that, Florian, and show it, because I think it's a really, really great piece of technology.
We'll do in a second. I think what we also have experienced is, if you look at the Spotifys of the world, often they start questioning whether an ICO would be the right thing. And as only a few people know, 80% of our economy are made up of the SME type company. So there is a huge potential, but they really struggle to get finance. And I think this is what the mission we started 3 years ago is. I think it's really still exactly the same challenge companies are seeing. And I think it's good to see that with modern technology, we are in a better position to help them, be it through a lending exercise or equity. So this is again the investor portal. They can obviously see offers, and let's just really quickly look into it. I mean, the process usually is really the same in a sense. Like with lending, you would look at the details of the company, how much are they willing to give away, what's the team, what's the details. That's the usual place where you get up to date and you get the insight. And then obviously the investment process is very straightforward. I think I've mentioned that we support credit cards, crypto if necessary, or if there's a demand. And just let me stop with this. This is cap table management. Again, now we're obviously on the business side looking at the data, because it doesn't stop such an exercise with investors going and spending some money. It means obviously you have to distribute the stakes onto to your investors. You have to maintain the data, and this is all done automatically. So if this person has bought into 2 stakes, obviously this is updated in the register. And now if they start trading on the secondary market, as for example, and if person A sells to person B, obviously if the transfer is successful, this will all be reflected in the cap table. So that's an essential part, not only that you're obviously, as you can see, like Excel, really simple change data. This is the basis for all your shareholder engagement. Now, this is very similar to the process we have seen before. So you can, once you have the register, you can send out and the investor gets an invitation code. They can log in, and at any time, point in time, they can see the equity they're holding. It could be the app that we're offering, or it could be, as you can see here, just the investor portal that works on any larger device. So as you can see, I think this hopefully highlights a bit that the process itself is very lightweight, very similar to the lending. And I think the beauty is that we really offer businesses, small to medium businesses, an option to choose whatever is the best financing method for the type of, for the status they're in, because they can change over time. Maybe at the beginning they're willing to give away equity, but in a later phase, lending might be, a loan might be the best, or the opposite. So I think that flexibility is really a bonus.
Mm-hmm. Okay, great. Thanks for showing that, Florian. Chris, anything else from a partnership perspective you want to add? I think we're coming slowly to an end, and I want to do a bit of a Q&A with people listening in.
Yeah, I think the only sort of thing to to add is, we we can provide access to the community to a large number of different partners. So I think we're different from many organizations in that we're not just trying to align down one route or follow one channel. I think the platform, the flexibility that you've just sort of shown and what it can deliver for so many SMEs will mean that the partners we can attract will be broad. And this really is about trying to provide best-in-class solutions to the SMEs. And we are very, very interested to work with both traditional and established and new and innovative businesses to go out and help the SMEs, as we say, get back to what they want to do. So, I'd be delighted to hear people's thoughts on that, maybe as sort of part of the Q&A.
Okay, so let's open up the floor for a few questions. I think if people have any specific questions, the chat's open. You can raise some questions towards the content that we shared and shown, and we're happy to respond to that. In the meanwhile, Florian, you might have another demo that you can show. Maybe the secondary market.
Let me see in my little bag whether there's something else. I mean, there will be the secondary market, but I'm not sure whether this is now the main topic. But
well, there's an interesting point in the secondary market, though, Florian, and this is something that's very attractive to both sort of partners and investors. Having a secondary market, having the access to liquidity, means that investors more readily make those decisions to invest in SMEs and companies because there is that route to liquidity. So again, that's always been a barrier to entry for a lot of funds and investors, is to looking at the SME marketplace, because the perception is once you're in, you're in. The way that mainstream and traditional banks have got around this is obviously by using capital markets to try and sort of filter out the side or to resell or repackage. But actually, the secondary marketplace that WeOwn provides means that investors can go in, and then if they have liquidity needs or if the credit profile changes of the company they're invested in, then there is a seamless and secure transaction they can facilitate with other investors on the platform to transfer that asset. And again, it's a very unique part of the platform and something that investors find very attractive.
Yeah, no, you're absolutely right. And I think, I'm happy to, because I've just seen a question. Happy to show this 1 minute demo in a second. I think because Sasha was mentioning the software as a service approach we're taking, and I think the beauty is, independent whether this is an asset manager or a fund manager or any type of some company in the financial services, you usually have the same building blocks that a portal or a solution needs. So if we talk to partners, they usually need some form of onboarding. They always need some form of identification. They always need some form of payment because those assets usually are obviously sold to someone. We always need some form of investor engagement because that's part of the story. And in a lot of cases, there is, as you said, Chris, there is the trading because people don't want to be locked in. So I think kind of these 5 building blocks which make up, or which are an essential part of the offering that we have, is something that you can apply to different industries and different types of companies. And I think this is where we see the interest coming from.
Yeah.
So
there's a few questions coming in. Sorry, Florian.
Sure.
There was a question here before. You start with accredited investors. Will there be a time where normal retail investors will be able to come in as well? So we support, on the software as a solution side, and even our marketplace version, we support both. We support retail investors and institutional investors. Now, on the lending side, we've only enabled institutional investors at the moment, but we can easily enable the retail investors. Again, as a software as a service product for a financial services provider or incumbent, if they have the required regulatory, regulatory approvals, they can offer, obviously, financial products to both accredited or retail. It depends on the company. For us, if, for example, a business does an equity raise publicly on our platform, they need in Europe, they need a prospectus, they need the regulatory approvals to basically sell equity to the public. We can facilitate that. We have partners that can do that can do the legal setup and requirements. So public investors can participate. That's not a problem. On the lending side, we've specifically excluded retail investors simply because we're just in the process to launch the lending part, and we want to just ensure that we have the right protection, the right mechanisms in place. And we've also seen, especially on the investor side, that the institutional semi-professional appetite towards SME lending and investment is much, much higher at this stage. So retailers will require more protection. They will require more help, more support. And we've only focused on the accredited institutional side for the moment for the lending part. But as a software as a service company utilizing our technology and our service, you can offer it to as many types of investors as your regulatory approvals allow. We can do both. We can support both. We can do KYC AML. We can do KYB AML. It's all built in our product, and we can easily support both. Sorry, Florian, I interrupted you.
No. I was just laughing because there was a question about the secondary market. But yeah, I'm not going to show a video unless you really force me to.
Hey, there's a good question for Chris. How does WeOwn differentiate itself from the competition? How do you see that offering returns to potential investors in WeOwn?
Yeah, I think WeOwn differentiates itself by, again, being that sort of true peer-to-peer, by actually enabling the investors to directly access the SMEs and negotiate, and all the services it provides around the side. I think it's unique from other sort of platforms, aggregators. It isn't making lending decisions on behalf of people, so therefore it's not trying to be a bank, and it's providing a technology platform as well to make it fast and efficient. It's, you know, the feedback we've had from, because there was a question about SaaS above as well, sort of the feedback we've had from people who are looking at it, asset managers, potentially sort of investors, debt funds, private equity houses, they see sort of a huge opportunity in it through the secondary market, through the surety. You know, a private equity investor recently sort of told me that the most nervous 2 days of his recent life were waiting to see whether or not the shares he'd paid for and bought from somebody were actually owned by that person, and that actually they were going to end up in his bank account or his investment portfolio as such. So having that immutability and that clear sort of transfer, in terms of the potential, so the returns to potential investors, I mean, clearly we know the marketplace of tokenization in financial services and fintech is massive. You know, there's an estimate that over the next few years that in the UK alone, the value of the market will be over sort of 3 billion. There's numerous sort of articles about in the States that there is something like 34 or 40 trillion dollar real estate marketplace that people are looking at tokenizing. So we see that this type of business model, this type of software as a service, this type of platform is massively scalable and has an awful lot of sort of use cases. And therefore, the investors that are talking to us also come from the corporate venturing side. People who are interested to expand their own capabilities by forming sort of partnerships and joint ventures with WeOwn, as well as actually just looking at the financial returns. So they see it on both sides of the coin. And I think that gives us even more conviction that the model and the platform is different from what we've seen elsewhere. It gives us more conviction that there is a place for it in the market. And the fact that it's up and running already is different from an awful lot of other companies that are entering the space where they're still going through all their teething problems and trying to build out the tech, which is not particularly easy. And, you know, I think, you know, these guys have done a great job of.
Excellent. So in terms, Chris, maybe just as a final word, I mean, we've got 10 minutes left, but I think we can give some time back to people. What's the best way to engage with yourself or with myself in terms of if you as a viewer are interested in a solution of ours, be it SaaS, be it direct, be it a funder or investor, basically getting in touch through this network or?
Yeah, I think getting in touch through this network or sort of through LinkedIn, there really are sort of no silly questions here. So the range of opportunity, the range of partnership, and the way that we can work with people is incredibly broad. And yes, we have a clear purpose and we've got a focus, but actually, please feel free to sort of bring what we consider the sort of the silly questions. We know the only dumb questions are the ones you don't ask, but please do come and talk to us. It sounds like that's our final bell, but
I'm not really sure. Yeah. I think someone here has still a physical phone line.
Yeah.
Okay.
Yeah, but please do sort of reach out. It would be great just to, and also thoughts and sort of feedback. We're finding new use cases and new interests every day, and as we sort of build the community, we're always interested to hear from people as to sort of proactive opportunities and thoughts.
Yeah, excellent. So thanks again. Thanks to my speakers here in this little video room. Thank you, Florian. Thank you, Chris, for participating. It was a little bit weird asking you questions that I already know. So, but it was great. I hope our viewers enjoyed it. We had a number of kind of followers, community members from our world that have been joining the session, which is great. Hope you found it quite useful. And those that are interested in business opportunities, reach out to Chris, reach out to myself, and we're happy to talk. We're happy to engage. We'll continue to hang around in front of our laptops here and do a little bit more networking. And yeah, thank you very much, everyone. Enjoy your time, and thank you to FinTech Talents, Virtual Spring, and Liz and everyone else, and Victor, to facilitate that for us. Thank you very much.
Thank you very much, guys.
Lovely being on.
Thank you.
Have a good evening. Bye-bye.